Good afternoon, friends. Thanks for joining us today during a tough period in both crypto and equity markets. Today, we have Wave Financial back for the second time. If you remember, we did our initial webinar on Wave back in January of this year. Wave is, as many of you know, one and only true wealth manager in digital asset space. Wave is an SEC-registered digital asset wealth management company with suite of investment strategies and funds for serious investors. They're focused on filling the gap of traditional wealth manager who frankly have been slow to adopt to crypto and frankly lack the expertise to execute. This is where Wave comes in. Currently, they have over $1 billion in assets under management, and we believe they will grow many multiples of that in coming months and years. Today, we're again joined by our good friend, Matteo Perruccio. Just quick background, he has spent 30 years in various strategic and leadership roles across asset management industry. Most recently, he was a non-executive director and global head of strategic partners at Jupiter Asset Management, which is a 58 billion FTSE asset manager based in UK. Before that, he held several roles as CEO of Pioneer Investment Management. He also has extensive experience in family office space, having served as a chairman of Second Fine Multifamily Office. Today, the moderator will be my colleague, Sean Farrell. As many of you know, he heads up our digital asset strategy. There will be a Q&A at the end of the presentation. You can ask a question using a Q&A button at the bottom of your screen. If you have further questions and would like to inquire about investing in any of Wave's products, feel free to contact us or Matteo directly. As usual, we will send out the replay information. As always, on behalf of my colleagues and my partner, Tom, we are grateful for your support and business. Feel free to email me or your sales rep with any suggestions or thoughts. I will now turn the mic over to my colleague, Sean. Thank you very much.
Thanks, Sean. Appreciate the kind words and the intro. So welcome, everyone. Obviously, as Sean had mentioned, we are going through a bit of turbulent times as it pertains to price action. But I think that such times are perfect opportunities to think about ways to risk manage, ways to allocate, ways to diversify investments, especially in this emerging asset class. For those who have been paying attention to our work, I think we've highlighted the increase in appetite for investing in crypto over the past 1-2 years. The latest numbers suggest over 30 billion of capital was deployed into crypto and infrastructure companies in 2021. And despite languishing asset prices, those investments have continued and multiplied. So I don't want to take up too much time, and I want to pass the mic over to Matteo to go through some of the latest developments with Wave Financial. But safe to say, Wave is working on some pretty good stuff, and I'm excited to hear more about it. So with that, Matteo, I'll hand it over to you, and you could take us through the latest in Wave Financial.
Thanks, Sean. Appreciate that, and thanks, John, for the introduction. Hello, everyone. I can only repeat what everyone else has been saying so far about the current environment. It's both fascinating, challenging, and I do think it reinforces the narrative that we have, the mantra, I should say, that we stick to, which is, in complicated and complex ecosystems like crypto and digital assets, it's really important to work with trusted, experienced providers. And in this sector, That is a challenge because you don't have a lot of regulated players, particularly in wealth management and asset management. You also don't have a lot of players who have been in from the very beginning. And those are two of the attributes that I'll talk about amongst others of Wave. So let me share my screen here. So thank you all very much. Let's get moving. So as I was saying, Wave Financial, I think what's important, there's 4 characteristics that I wanted to bring to everybody's attention. We were founded as the first regulated investment advisor in digital assets in the U.S. And that was in the state of California back in late 2017, early 2018. And we have since grown in size to over 1 billion, as was said before, but also SEC regulated, one of, to our knowledge, one of the 5 or 6 regulated players in the asset management and wealth management space in the U.S. We were, I think something that's important to highlight is that we were established with a focus on digital assets and crypto. So a lot of players that one will come across in this industry have a different origin. Firstly, we did not start out with an attention to regulation. So, we went through all the so-called brain damage very early on when there was very little attention being paid to being regulated and being compliant. We did that from the get-go because it reflected the fact that being both crypto native, but also having a leadership team, which I'll talk about in a bit, that also had a deep experience in the financial markets, both venture capital and traditional finance. Merging those two, we recognized early on that it was important that we get regulated, but that also we have this, we marry that with a team of people that were crypto native and understood the ecosystem from its early days. And that I think is a real advantage for us as we navigate. And I'll talk a little bit, I'm sure people are gonna be curious about what's happening with UST. And I think it's exactly that, the deep connectivity we have in this ecosystem that helped us avoid being stuck in that sort of downward spiral that we've seen happen over the last few days. We're managing assets. One part of our business, we manage assets of blockchain protocols that have large token treasuries, and I think that's the ultimate statement of confidence when you have the big players in the ecosystem trusting us to manage their treasury assets. I think that's a badge of honor. We're very proud of that. We also have Fortune 500 companies, institutions, and ultra high net worth individuals. Very quickly about the background and pedigree of the team. Wave was founded by David Seymour, who has a over 25-year track record in successful tech venture capital investing. He was a very early entrant into the Bitcoin sector, into crypto in general, acquired a degree of wealth in that sector and realized at a certain point in time, he was sitting on these different wallets, a complex portfolio, and he went around to his private banks and advisors and asked them to help him make sense of it, risk manage it. And back then, at that time, there was nobody that was willing or able to do that. And as a consequence, he kind of reflected as an entrepreneur and said, well, there seems to be a space for this sort of service. And that's when the idea of Wave Financial was born. He teamed up with Ben Tsai, who has a very strong and deep background and experience in derivatives and alternative investments. He was a former CEO of Merrill Lynch in Asia and head of commodities. And also he was former head of alternatives for AllianceBernstein. And so they came together to form a regulated Wave Financial. And then the third partner to join was Les Borsai. Les is one of the most visionary crypto natives that I've met in the industry. He was in from the very, very beginning. He was advising to Ripple before they became, what they are today, a company with an enormous treasury and a successful business model. And he's been a leader in both NFT and DeFi Then you have myself, which John already highlighted my background, and I bring, I guess one would say, a bit more depth and breadth to the traditional asset management background, because really what we're trying to do is build a bridge between traditional strategies and this new exciting asset class. So Wave Financial can be broken up into two sectors: investment fund solutions. So really what we're trying to do here is we're looking at assets. We're looking at these digital assets and trying to figure out, with our long experience in the traditional markets, what strategies can be applied and what kind of rigor can be applied to unlock the potential of the various digital assets that can range from, blockchain VC and crypto, DeFi, and NFTs. As I stated, we're SEC regulated, over 1 billion. We were founded in 2018, and we are now 40 people and growing. I'd say we're probably closer to 50 by the end of the month, and we'll be at over 100 by the end of the year. The other part of our business is treasury and managed account solutions. And this is really the business that I was referring to when I was talking about how we manage the treasuries of protocols. If you think about this is a bespoke service where we create managed accounts and we help risk manage to a risk profile digital assets for the client. This is something that's very hard to find, especially in an industry where there has been historically a culture of buy and hold, which is an inefficient strategy in almost any asset class. But in particular, because the early days, it was such a rewarding strategy, people really didn't put a lot of energy into thinking about how to more creatively and proactively manage digital assets. This is the sort of the range that we have today. On the left-hand side, you see the investment fund solutions. So I'll start. I won't go into depth on them here because we have a separate single slide on each of them, but just to give you an idea, the philosophy sort of was to how do we harvest the volatility of some of these assets and create yield and generate yield for investors. And that the first fund we launched was the Wave Bitcoin Income and Growth. In that area was the Wave Bitcoin Income and Growth, which is a cover call strategy targeting 1.5% monthly yield. And I'll talk more about that in a second. Wave Select is tracking the top 5 cryptocurrencies and rebalancing on a monthly basis. Then we kind of went into more singular tokens, and Wave ADA. Those of you that are familiar with the Cardano ecosystem, ADA is a token that can be staked, and we've been deploying it in the DeFi platforms and investing into different strategies to create yield off of ADA. The Wave Stable Asset Yield Fund just launched. Is launched, I think, yesterday officially. And that is a strategy which is market neutral and is designed to deploy stable coins into the DeFi ecosystem and some CeFi in order to generate between an 8 and 12% yield. And that is a very interesting strategy for institutional investors that are unable or uninterested in the volatility of the typical volatility of crypto. Wave Genesis, which is our first fund, over 3.5-year track record, is a VC fund investing in early stage blockchain companies. We're blockchain agnostic. We don't favor one blockchain over another, and it's been very successful. And again, I'll talk about that in a bit. C Fund is another VC fund we launched, which is investing in similar early stage companies, but with which would want to use or intend on using some of the Cardano ecosystem to build on. And finally, we have a pretty exciting fund, the Wave Non-Fungible Fund. It was the first NFT fund that we know of in the world. And that fund, again, I'll talk a bit more about it, but invests 70% in NFT collectibles and 30% in VC-like investments in the infrastructure and the platforms and protocols. On the right-hand side, you can see the treasury and managed accounts. I spoke to that. These, you can see the different skill sets with derivatives, crypto lending, DeFi and staking, and trading strategies. So we really have a very broad breadth of expertise, and we've been in since the very beginning. And we understand the unique attributes and the characteristics of the underlying derivatives markets, lending markets, and DeFi and so on, which enables us to be risk aware, but also to take advantage of unique opportunities. And this, I think, is, when you look at this holistically, it's what differentiates us from most any other player in the industry, because you will find players that are active in one or two of these areas, but rarely with such a holistic approach. This is an interesting slide to present on a day like today, because there's a lot of negative sentiment. I've been watching. I was commenting earlier with John about how it's interesting to watch the traditional financial news present what's happening, because it's doom and gloom and the end of everything. And in the same breath, the same announcer mentioned that this may be the end for cryptocurrency because Bitcoin is down 30-40%. And then about 10 minutes later in the show, he talked about how Disney stock was off 48%, but no talk of the end of Disney. So I think there's a lot of confirmation bias. Obviously, it's not an accurate comparison, but what I would argue is that this is an asset. Digital assets are, and in particular Bitcoin here, to sort of talk about the adoption that is here. It is real. It has gained institutional adoption, and however, it's still in its early days. And even when we talk about its level today, as if it is Armageddon at 30,000, keep in mind that that's still one of the best from inception, 10-year, 12-year track, one of the best performing assets in the world, and it's still far above its original issuing price of a penny. So I think we need to put things in perspective. And speaking to that, one of the interesting aspects of Bitcoin and Ether and crypto in particular is in a small dose, it can add a lot to one's portfolio, and in terms of Sortino and Sharpe ratio. And you can see that there's quite an upward slope in the impact to a portfolio, and that's something that we really want to I think get across to people, is that of course it's a risky asset, it's a volatile asset, and it has to be put in the appropriate dimension into a portfolio, but it has a very interesting role to play. And increasingly, we're getting more data sets this week, and I'm excited, which may sound odd, but I'm excited to see these sort of cycles, because it's what's needed for an industry to grow and mature, and to see how it behaves in various scenarios. So this is just a sort of a summary of what we're trying to achieve. We really see ourselves as trying to help clients unlock the potential of digital assets through diverse investment themes, yield generation, venture capital, and then NFTs. So let me speak really briefly about some of the strategies. The Bitcoin income and growth, this is one of my favorite investment products that Wave developed, that we developed. And the reason is because if one is ready to accept exposure to Bitcoin, there's kind of two basic ways, one or three, that you can do that. You can hold it naked Bitcoin and ride the volatility, and that's one strategy, and that should be a long-term strategy. You can invest in a high velocity trading fund, which is trying to arbitrage opportunities with Bitcoin, and that's another strategy. And the third is this strategy that we were the first to come up with, but others mirror it. We're still one of the very few that have it in a fund structure, and it's a income and growth strategy. So looking at Bitcoin over time, it's a fantastic growth asset. It's been growing pretty demonstrably over the last 10 years. And then if you add to that, okay, so we looked at it and said, how can we harness the volatility for something positive? And what we started to do is write covered calls on a monthly basis on Bitcoin, and we sort of pocket on average a 2%, near to 2% premium for the privilege, and capture historically, above 85% of the upside, and more recently 100% of the upside. And with that, we had the huge benefit of, being able to pay out over 20% dividend on an annual basis. Historically, that fund is now two in some odd years running. And it's quite an exciting, in my mind, fund, because it allows you to sort of mitigate some of the volatility. And in fact, in 2021, the fund outperformed Bitcoin. It's not the objective for the fund. In normal circumstances, it would not do that. But because Bitcoin traded within a range, we were able to capture the majority of the upside. And then you added on the dividend payout in 2021, which was 32.9%. We actually outperformed. So Wave Select 5, very quickly, it's pretty simple to understand. It's providing exposure for the top 5 tokens in over the last 5 years. And what we try to do is rebalance. We don't include stable coins, privacy coins, or things like Dogecoin, because for obvious reasons, and any other coins that are involved in litigation or regulatory conversations. And that's for the investor who would like a broader beta exposure to the industry. I mentioned this launch yesterday, the Stable Asset Yield Fund. We're really deploying assets. We're taking fiat, converting it into stablecoin, and then deploying them through the DeFi and some CeFi lending and other ecosystems, and with a target yield. The idea here is to have low beta to underlying cryptocurrency, right? But using the digital asset crypto DeFi infrastructure to generate lending yield and other types of yield with minimal volatility. And that fund, there was an announcement, is to be launching with approximately 60 million of initial investments. And I won't go too deep into this, but this sort of gives you an idea of the various ecosystems we use to try to generate that yield. This is a strategy that we've been doing on a managed account basis for large clients for a period of time, and been very successful. As an aside, I think we can highlight a topical UST, Terra. Everybody is talking about it. Having been in the industry and having been deep in this, we were looking at a lot of signals that were popping up to us, and things like anchor deposits, the liquidity on Curve, decentralized exchange, the trading activity of Bitcoin and Luna and UST, and the balance of Bitcoin on reserves held at the Luna Foundation to defend the peg. And we got concerned over the weekend, and we sold off all of our clients' holdings in UST. So I think, whilst it's a complicated time, I think it's an indicator of why one would want to work with, experienced players like Wave. Sorry, let me go in the back way. Wave Genesis. I mentioned this fund. This is the blockchain agnostic early stage investment fund. It's done very well, over 600% since its inception 3.5 years ago. We have a very strong team in DNA and venture capital and tech with David Seymour and our team. And it's an interesting fund, 3-year lockup, 1-year liquidity. NFTs. The NFTs are a controversial and often misunderstood topic. And I like to talk with people, particularly my own age, they throw out the so what argument. Why should I care? And I try to explain to them that, the real value and the real future of NFTs is in the idea of digital ownership. It's not just about digital art. It's not just about collectibles. It's about the utility that comes with having digital ownership. And that is expanding rapidly. NFTs are expanding rapidly into the sphere of finance. A lot of NFTs are now have a utility as collateral in the DeFi ecosystem. but also in and of themselves, many of the NFTs. We recently acquired an NFT which gave us ownership to a sports franchise. I'm not sure I'm allowed to say yet because we're going to do, I think, a press release on it. But I think the concept of it is interesting because it merges the virtual metaverse world and the real world, because it's a real sports league with merchandising and revenues attached to all the normal things that come with that. But it also has, potential to move into the metaverse and is also an NFT. So it just kind of shows you how these worlds are colliding at a velocity that we've never seen before. And 30% of the portfolio is investing in the VC type investing in platforms and protocols that'll enable this rapid growth for NFTs in the metaverse. As I stated, this was the first traditional private NFT fund. We try to have an informational advantage. One of the things about this, we remember these are not securities, right? So being deep in the community, having information is a huge advantage. And we have really deep relationships with developers, gamers, founders, entertainers, corporate influencers through our team who are incredibly well ensconced in these communities and are known throughout the NFT community as some of the thought leaders. And that really gives us an advantage. And we sort of value NFTs. We try to apply a more structured approach to evaluating the value of these NFTs: exclusivity, collectability, utility, and the team's capability to execute on a defined roadmap. So we're not just buying things that we think are cool, so to speak. And we use some machine learning. We build our own models to try to understand the on-chain transaction data to understand where there's value and what kind of traits might be rare and valuable over time. The managed account solution I talked about, and I just wanted to go over this really briefly. I think I spoke about it, but we have a pretty holistic suite of services that we provide. So imagine the typical investor, large investor that wants to get exposure to crypto in a diversified way, create some yield, and be able to dictate and manage the type of risks that they're taking. So they might say, I only want so much risk to DeFi, or I want a lot of DeFi exposure. I don't want these tokens. I want to liquidate part. I want to create and generate yield. And we create bespoke portfolios for them. We act as a fiduciary. We never trade against our clients. And I think, in my humble opinion, one of the most important roles that we play is to evaluate and ensure that the client is engaged with reputable institutional quality service providers. That's a very important, as we're seeing more and more in the industry, that becomes a real value-added advantage. So, in summarizing sort of the characteristics that we have, as I said, we're SEC regulated and we're exclusively focused on digital assets. So we're not dabbling in this. This is our life, our lifeblood. We also have a simple fee structure. We do an AUM-based fee structure, so it's very transparent. And as I had said, we're legally obligated to work in the best interest of the investor. And the assets are held in separately managed accounts. So the assets are owned by, which provides, asset and liability segregation. We also have a group of very respected and knowledgeable consultants and advisors who advise, ranging, from the founder of TechCrunch and Arrington Capital to Charles Hoskin, the co-founder of Ethereum and founder of Cardano, and so on. So, and we have their trust and faith, and we actually manage some assets on behalf of many of these. So again, I think that's another feather in our cap. So with that, I will pause. I hope that was useful for everyone. And I thought it might be great to field some questions or.
Absolutely. Matteo, that was phenomenal. Appreciate you walking us through that. I guess just to touch on a couple of things real quick, obviously you brought up UST. That was a, source that had been a source of yield for, one of Wave's products. And, the crypto native knowledge that you brought to the table helped to circumvent the quasi bank run that essentially occurred the past couple of days. So yeah, from my perspective, that is a key advantage of Wave Financial, just to reiterate that point. But I think to take it a step further, at the outset, you kind of discussed how Wave is not just, isn't like giving your capital to a hedge fund. You guys are RIA, right? So you have a different level of fiduciary responsibility. So I would say coupling the crypto nativeness that you bring to the table and this different level of fiduciary obligation that hedge funds and the sorts aren't quite beholden to. I think that is a key advantage and for you guys, and I don't know if you feel the same about that.
Yeah, I think if I can jump in, I just want to. I think I was talking with someone recently, and I made this analogy, which may not be the most accurate, but I think it's helpful for people who are coming from outside and looking at this asset class and this sector and trying to figure out, make sense of it. In the early days of emerging market investing, it was the Wild West for investors. To invest in a market like Brazil, or invest in a market like Colombia, or invest in a market like Russia, you really people tried different ways to do that and got burnt, and some made a lot of money. And those that I think did well over time, and someone made the comparison a little bit for us is if you have people on the ground. If you're an emerging market manager and you had experts in Brazil and you had experts in Colombia, you made very distinctly different investment decisions than the guys that were sitting in London or New York or LA or wherever they might be, Singapore, investing on the basis of, very good data, smart people, all those things. But it's a very different thing when you have a feel for a market. And I think digital assets share a lot of those characteristics, and just remind people that, sort of 15 years ago, 20 years ago, emerging markets was a 2% allocation in people's portfolios. It wasn't a 30% like it is now. It wasn't a must have in everybody's portfolio. It was really for those with a large risk appetite. And things normalized. People got more familiar with the underlying markets. And there were structures, there were more expertise brought to the table. And I think that's what we're trying to do, is help people ride this evolution of a very complicated and fast evolving early stage market.
I think that's a phenomenal analogy. I really like that. And, to the why, the broader point of, prices declining recently, I do want to caveat, any kind of morose sentiment with the fact that all risk assets are selling off at this point, right? And the fact that, we now crowd around a TV and, wait with bated breath as to what, the Fed will say about interest rates and inflation, what have you, because crypto is so closely correlated with tech stocks. I think that is a phenomenally positive development for the industry. And just from a cyclical perspective, every time we have these prolonged bullish periods, there's always a sell-off, and the scams and the more speculative projects, get washed out, and crypto inevitably comes back stronger when people, least expect it. So
right, and I heard something. You're absolutely right, and I heard something very interesting today about the fact that there was a lot of dialogue about the correlation, trying to understand the correlation of Bitcoin and other cryptocurrencies to the broader markets. And interestingly, it's quite intuitive, right? The more traditional adoption there is of the instrument, the more it's going to be correlated because it's being used as collateral, it's being used as another instrument in a portfolio. So if they're selling off their portfolio, you're going to see movements in crypto of a dimension that you didn't see before when it was held predominantly by crypto natives. And I just remind people, 2017, 18, it was 20,000. We're at 30,000. This is not the end of the world. If we were at $5, I'd say we got a problem here, right? But we're,
I don't know, Matteo. I'd be backing up the truck if we were at 5.
Yeah, I would too. But I could understand why people were, jumping for bridges. But I mean, we're still in a very, solid range at 30,000. So I think it actually speaks to the strength and the durability of Bitcoin. What's happening right now, as difficult and as complicated it is for those that got in the 50s and 60s in the hubris, for sure.
Yeah, absolutely. And that's a great point, and something we addressed in our annual outlook is towards the end of Q4 last year into Q1, there was a lot of quote unquote unexplained selling, because all of the narratives within crypto were still very bullish, but it was merely all of these macro funds that had piled into Bitcoin, that their risk models were just telling them to sell Bitcoin now. And so that was that first initial bout of selling pressure. And I think, over the past couple of weeks, what we're starting to see, some more crypto native, we'll call it capitulation. But overall, I think it's a much rosier picture than I think the charts today would speak to. On the note of, the maturation of the asset class, I guess in conversations, there's probably not a number that you have that is solid, but do you have a feel for what percent of the capital clients are now allocating to crypto, broadly speaking, whether it be, in the income and growth fund or across all different offerings?
Yeah. If I understand the question correctly, do we have a sense of what the average sort of sizing is in a portfolio of digital assets? Yeah. Yep. I think, look, there's been a lot of talk, and we have it in our presentation, the sort of 1% to 5% is the right weighting to be. We're seeing more towards the 2% of the bigger traditional players. I think we're seeing more towards the 5% of the people who had come in earlier, hedge funds, other groups like that. So you got the sort of the 2. I think it kind of makes sense, right? The traditional players are dipping their toe in, and predominantly entering through Bitcoin and Ethereum exposure. Interestingly, though, I've seen a big uptick in conversations. And in fact, we're in conversations with a large European wealth manager over 100 million DeFi yield mandate. More and more, they're leapfrogging the sort of conversation about how much token exposure do I want, and saying, wow, I see a fixed income substitute here with the market neutral strategies in DeFi where I can get a really good yield. And, many of these players are sitting on pretty high risk portfolios of junk bonds that are not paying very much. And for them to get a better return, they have to go really high up the risk profile spectrum. So it's it's an interesting moment for a lot of investors. I find that quite interesting, actually.
That's interesting. That is helpful. Good insight information. In terms of, so I guess let's move on to speak about some more specific items related to the funds. I think from our perspective, obviously we provide investment advice as it pertains to, or investment research as it pertains to crypto assets themselves, the fungible ones normally. But, our clients have been very interested in getting involved in NFTs. It is a bit more esoteric on its surface. And there are, when you actually unpack NFTs, there are many different types beyond just monkey JPEGs, right? So I guess, can you speak to the methodology that the team employs when it comes to evaluating investing in NFTs?
Yeah, I want to make a contextual comment first, and then I might tap into one of my colleagues to talk a bit about that also. But I think there's a narrative that I understand why it's there, but I think it's unfortunate because I think it's confusing a little bit the conversation. As I tried to say in my initial comments about the NFT fund, the press has grabbed on a lot to, and understandably, right, with the sale of Beeples and the sale of the, Bored Apes and the run up of some of the CryptoKitties and all of these things, has focused a lot on collectibles and in particular art, digital art. And that became the narrative that got talked about. And there seems to be this just association. NFTs, digital art, really cool pixelated stuff, NFTs, and it is so much more than that. And I think that's the first thing that I want to get across to the participants on the call who may, be, coming at this for the first time or not that, don't have a deep understanding of it, that again, it's about digital ownership of assets of all kinds of things, documents, titles, registries, real estate, financial instruments. There's just a whole host of use propositions for NFTs. So the reason I bring that up is because when we look at it and we think about how to evaluate these NFTs, we're looking at them from very different perspectives, where some of it is creative, some of it is about, is this going to resonate? Is this something that has attributes that we've seen before or we think over time are going to be in demand? I suppose, in some degree, it is similar to the traditional collectibles, wine and fine art and others. How does one decide which model of Ferrari is going to, over the next 20 years, appreciate more than another, or which wine? And it has to do with being really, really deep in that ecosystem in the community and knowing what people want from that car. It had a special gear shaft that it was only 1 year they made it, this or that or the other thing. And it's really the same sort of, sorry if I speak because I come from the old world, so I speak in old world analogies, but I'm happy to have one of my partners from Wave jump in if they want to add anything to what I've said, Heidi or team.
Sure. I'll jump in really quickly. This is Heidi. And I thought that was an excellent example, Matteo, is really understanding what's underneath the hood, literally and figuratively, of that particular item that's being collected. But there has been, as Matteo mentioned, a shift away, at least in the crypto community. And I think that there's something like 960,000 active NFT wallets that trade in this space. There's been a shift away from collecting an NFT just for the art or just for the IP. That will always exist in the broader world. But this movement in the crypto community has been more towards what we really look at. There's some sort of utility behind that NFT. So maybe that NFT gives the person access to a community, like we've seen with the Bored Ape yachts, or perhaps it allows some sort of use in the metaverse, or it even has grants some sort of use within these games as well. That's where we're really leaning more into, is what is the longer term utility and use case of the particular NFT. And then, as Matteo said, there's all sorts of new ecosystems that are evolving, such as using your NFT as collateral in DeFi. That's truly where we're, and as the metaverse evolves, not just in gaming, but into traditional commerce, we really see that the backbone of any kind of digital asset will be built on blockchain or an NFT. Was that good, Matteo? Or do we want to have anybody?
No, that's perfect. I think, thank you.
Thanks.
Saved by my colleague.
I thought that was great too. And, it's such a large space. I think the best Everyone tries to look for metaphors or analogies, comparisons to traditional finance when it comes to blockchain technology or crypto. And I feel like the best example I've heard is comparing a non-fungible token to, say, an ETF or an exchange traded product, wherein the ETF is just nothing but a wrapper that holds some other kind of data that trades on traditional financial infrastructure. This new wrapper, an NFT, kind of how it houses this other non-fungible data that is able to be traded on this new, decentralized ledger technology, more or less.
I think that's really good. If I may add another attribute to it, if we follow that analogy, I think that the complicating factor, or the analogous factor, is that in order to understand what we think that NFT or that ETF is going to do, we have to really have a good sense of what investors are looking for out of the underlying asset, who they are, and is that wrapper capturing the appropriate assets to meet that demand? So that's what we do with NFTs, right? We have to understand, and what a lot of people struggle with is that a lot of the demand base is a demographic that has not typically been very active in the financial markets, meaning
Absolutely.
A younger Gen Z, very digital friendly community. And so they have different behaviors, they have different expectations and different aspirations as to what they want to achieve with their investments. And that's where the expertise really, that's why you can't just set up an NFT team with 4 guys or people who have been trading and say, hey, let's run an NFT fund. You'll fail miserably for sure for that reason.
Yeah, absolutely. You almost need an expert. You don't need, again, to the ETF analogy, you don't need an ETFs expert. You need an expert on that underlying asset.
That's right.
Right. So that's great. And I'm excited to hear that the team is venturing into, utility-based NFTs, because as somebody who's been experimenting with, a lot of different utility-based NFT projects lately, I am incredibly bullish on, the ability to pair a token with an NFT. For instance, I'm using a walking app right now. It's called Step In. And essentially you buy these virtual sneakers, and as you walk around, you're essentially compensated for moving around. And, being able to assess the business model, potential use cases, potential revenue streams, that is all facilitated via this NFT. It's quite fascinating. So,
and I would add one last point, which is I myself, right, I'm pretty knowledgeable about digital assets, but even I, kind of looked at how would I make investments in this sector, and I think if we're honest with ourselves, right, in most asset classes that in the traditional markets that we invest in, if we are buying individual stocks, we are pretty much speculating or buying on unless we're analysts like you guys, right? We're buying on the basis of some data, some publicly provided data, which doesn't ever tell the true story of a company or of a proposition. And I ended up investing in our fund because I said, I want experts. I want people who are deep in the space. If this thing is going to evolve, I am not in it 24/7 to be able to understand what directions are going to evolve faster, where the money is going to be made. So, I just encourage anyone on this call, whether it's with Wave or somebody else, if they do want to get into any of these assets, work with experienced providers that understand the space. Yes, you can dabble. It's not that hard to buy Bitcoin, that by all means. But if you want to, do things in DeFi, you better understand what you're doing, or you're taking a lot of risks that you're not even aware of.
Couldn't agree more with those sentiments, Matteo. And honestly, I think we're coming up on the end of our session here, and perhaps that's a perfect way to end. I guess perhaps I'll open it up to you for any closing thoughts, comments, and perhaps a place to reach out if people are interested in investing.
Thank you. So first, thank you everyone who stayed awake through that call. And I appreciate your interest. I think I would just really reiterate that I'll make two very quick comments. One is about a conversation I had with a peer of mine, a friend, when he said to me, "Who cares about the metaverse? I don't get it." And don't confuse my comments with they are an explanation, not an admiration for the metaverse. Everyone can have their own personal view of how it's going to impact society and whether we like it or not. But my view was, why do people care about a photograph of a plate of pasta in Portofino on Instagram or on Facebook? And I said, are you on Facebook? He said, yeah. And I said, your wife on Facebook? Yeah. And she loves it. She loves it. So yeah, she loves, because she gets lots of likes. I said, well, you're in sort of a metaverse, but you're in metaverse, 0.01, right? And we've already gotten into 0.2, 0.3, right? And we're going to move forward. So you need to care, because people care, and it's human nature. Secondly is digital assets. It's sort of the same sentiment. Because we don't understand something, and this was a very personal journey I took, because I didn't understand it, my first initial reaction was to dismiss it and say it was all nonsense. It was only until a young colleague of mine who worked for me for years said, "It's very uncharacteristic of you to not like something that you don't understand." I went back and learned it, and I came out on the other side of the spectrum, really realizing this is the future. This is the future of the ecosystem, financial ecosystem. So if you're interested and you like what we do, if you think the way we're approaching this is sensible, encourage you to reach out to Wave. You can go on our website and make contact. I'm available. Heidi, who's also on the call, really easy. Matteo at wavegp.com and Heidi at wavegp.com. So please reach out to us, and we'd be happy to help answer any of your questions or thoughts, even if you just want to understand something better. It's part of the journey. So thank you.
Great. Thanks, Matteo. And looking forward to watching the growth at Wave moving forward, and excited for next time we get to chat.
Thank you.
Thanks.